Hey, what's up, my friend? So in today's episode, I want to share with you the 6 best practices for beginner price action traders. So the first thing is this: you must know what's the current market structure. Or maybe if that's something not familiar to you, that simply means, right, to find out what's the current market condition. Is it in an uptrend? Is it in the range? Or is it in the downtrend? Because once you can define the current market structure, then you know what to do at any given time. If the market is in an uptrend, then clearly you want to look for buying opportunities. If the market is in a downtrend, then clearly you want to look for selling opportunities. What if the market is in a range? Then you know that you can look to buy low and sell high, buy near the lows of the range at support, or sell near the highs at resistance. So things become clearer once you can define the current market structure. Number 2, identify the area of value. So here's the thing: just because the market is in an uptrend doesn't mean you want to blindly, hit the buy button. Buy. No, it doesn't work that way, because the uptrend, the market could be, overbought, it could be overstretched and, about to make a pullback or reversal. So what you want to do instead is to identify the area of value on your chart. It could be areas of value, multiple areas of value. So again, if the market is in an uptrend, an area of value could be at an area of support. It could be at a swing low. It could be at a respected moving average, like the 50-period moving average. It could be at a respected trend line where the market has bounced it off, right, over the last 3 times. These are areas of value that you want to identify on your chart. The third thing, you want to know your trading setup ahead of time. So for example, let's say we talk about uptrend again. If the market is in an uptrend, there are numerous ways to trade that trend. You could look to trade the breakout of the swing high. You could look to trade the break and then retest of that move. For example, price breaks out of resistance and then retest becomes previous resistance becomes support. That's another possibility. You could look to trade the retest of the previous swing low, the retest of support. So you can see that there are numerous ways or numerous setup, right, that you can go about trading an uptrend. So you want to know ahead of time, right, which trading setup you're going to go with, right, to trade that particular market condition or market structure. Number 4, avoid trading in no man's land. So what I mean by this is, imagine that the market is in a range contained between these lows and these highs. And the price right now is in the middle of the range. So if you were to be trading in the middle of the range, your risk to reward on the trade is usually unfavorable, because your stop loss has to go logically, or rather if you are going with a proper stop loss, it has to go below the low of the range. Okay, as for target, you're not going to target like, 10,000 or 1,000 or 2,000 pips above the highs of the range, because the market could jolly well, reach near the highs of resistance, get rejected, and come back near the lows of the range. So for most people, for most swing traders, they would set their targets, right, just below the highs of the range, just before resistance. So if you look at the chart, if you're buying near the middle of the range, your stop loss is below the low of the range, and your target is before resistance, before the highs of the range. From a risk to reward standpoint, it's usually less than 1-to-1. You're probably risking $1 to make like 60 cents or worse. Okay, so avoid trading in no man's land. Avoid trading when the price is in the middle of nowhere. Avoid trading when it's far away from an area of value. Okay, and the 5th thing, know the behavior of the markets that you're trading, because different markets, they have different behavior. For example, the stock markets, it's proven statistically and according to academic research and according to my own backtest as well, the stock markets, it's in a long-term uptrend, right? And there are, pullbacks along the way. So what happens is that more often than not, when the stock market makes a correction, a pullback, what usually happens is that it will not become a bear market or recession. That pullback will usually end, and then the uptrend continues itself. So if you are a stock trader, you're trading stocks in an uptrend, whenever there's a pullback, there's a correction, those are actually trading opportunities for you to buy, to get long, because there's a good chance, or more than 50% chance, that the trend will resume itself. So if you understand this behavior of stocks, or rather the stock markets, right, you can actually use this to your advantage, even as a price action trader. Okay, and another example is currency market, pound yen. So pound yen, pound dollar, these are, I would say, trending forex pairs. They have momentum behind them. So whenever these currency pairs, it breaks above the previous day high, it tends to continue higher. It tends to have follow through. Or whenever it breaks below the previous day low, it tends to have follow through towards the downside as well. So these pairs are actually quite good to be trading, for example, breakout trades or trend continuation trades. And finally, the last tip that I have for you is, as a beginner price action trader, if you are in doubt, stay out. Because price action trading is discretionary trading. There will be subjectivity involved. Sometimes the market structure might not be something that you're familiar with.
Rayner, it looks like an uptrend, but at the same time, it looks like a range as well. I'm not sure.
Well, if you're not sure, if you're in doubt, Stay out. No one's pointing a gun at your head and telling you to put on a trade. No, just stay out. Look at other markets, other time frame that have trading opportunities or trading setups that you're more familiar with. Don't force trades. Don't take trades you're not comfortable with. Don't take trades where you're thinking, maybe I should. No, don't take the trade. Okay? So with that said, let's do a quick recap. First thing first, identify the current market structure. Second thing, identify your areas of value. Number 3, know your trading setup. Number 4, avoid trading in no man's land. Number 5, know the behavior of the markets that you're trading. And number 6, if you're in doubt, stay out.